Welcome back. You're still tuned into Trading Hour. Let's get in all the action from the F&O space. Mangalam is joining in now. Mangalam?
Well, it looks like, ahead of expiry, the traders have closed their books on the Nifty trade. Why is that? Because they believe that the market will be very narrow range and they're looking forward to the December series from here on. And there are data points that suggest so. The Nifty Bank and the mid-cap index are fairly undecided right now. The Nifty is off its lows and off its highs in equal measure, the Nifty Bank as well. And we have the mid-cap index. While, at an index level, it's slightly outperforming. If you look at the advanced decline, that tells you those lines are fairly close, even Stevens. So, it's fairly indecisive and uncertain right now. Typically, the Nifty trades in a narrow range ahead of a big move on either side. And today's high on the Nifty, 26,025, is something that we'll be watching out for at lower levels. The 20-day moving average of 25,852 is an important support as well. Ahead of expiry, when the market expects a big move or a move in either direction, you see the India VIX move higher as well. But, with the market being absolutely fairly range bound and the India VIX moving lower, it's telling you that the traders don't expect this range to move out as well. So that range continues, and that's further cemented by the action that we've seen in options. 25,600 call, extremely active in today's trading session, premium for almost 25-30 rupees. Again, coincides with today's high on the Nifty, telling you that is where the supply would likely to be. And then you have the 25,900 put at the lower level, which again coincides with around that 25,850 sort of mark, which is the 20-day moving average. So 26,000 call and 25,900 put, both of them equally active in trade. You want to get a further analysis on the range for today? Look at the straddle, 25,950, which is where the Nifty is closest to right now. The 25,950 call and put, both of them together have a combined premium of 80 rupees, telling you around 25,870 or 26,030 is where the broader range for the frontline index is. Again, largely on the range. So that takes care of the November series expiry. Now all eyes will be on December series, which is expected to be a big mover again in either direction. Why is that? Because on one side you have the RBI policy meet, then you have the US Fed meet where the street is expecting a rate cut, US-India trade talks, any sort of developments out there would be positive. And towards the end of the year, you also get a bit of Santa Claus rally. Do we get it this year or not is something that we will be tracking. So for now, over to December series, even as November series, the expiry session may end on a consolidatory note.
The bulls will definitely be expecting the Santa Claus to come on the street and take the Nifty past that record high level. Mangalam, thank you for that update.